given Circle IPO and a pop to a $32 billion market cap, in addition to Stripe acquiring Bridge for over $1 billion. How do we think stablecoins fit into the future of payments?
Agentic is a very big umbrella of ways to shop. There's an agent who's empowered to complete a transaction on your behalf, but there's some real hard work that the industry needs to do in order to empower this autonomous agent being able to store credentials, act on behalf of a human, and complete payments. And particularly everything in payments, the complexity of it's in the back end. All of us who have watched payments over the last decade have watched a lot of QR codes at point of sale just not take off, right? You need to be able to create a form factor that is as easy for the consumer as having their credit debit card that's on their phone. The American consumer loves points, right? So that's well understood. But a couple things are changing there.
Welcome to Tech Finance. I'm your host, Sasha Orloff, repeat founder and current CEO of Puzzle, and self-professed finance nerd. On this show, we dive into the pulse of B2B fintech, from newly funded startups transforming the office of the CFO to major industry shifts, deals, and partnerships that are reshaping how we think about finance. You'll hear the most important developments, essential analysis, and of course, AI innovations. This show is brought to you by Puzzle and the Turpentine Podcast Network. Let's dive in. Welcome back to Tech Finance. If you're on the East Coast, or Tech Finance if you're here in California like me. I am crashing from my wife's office for anybody watching on video, hence the lovely children's decorations and pottery or whatever behind us. Our guest today is Cindy Turner, who is the Chief Product Officer of Worldpay, which is obviously one of the largest leaders in payments technology, and some really interesting stuff because they just published this global payments report, and I'm getting excited to both introduce her, share more about this because it was really fascinating. And so there's all sorts of good stuff. And let's dive right in. So Cindy, welcome to the show.
Great. Thank you very much for having me, Sasha.
All right, let's dive into it. For those listeners who don't know who you are, like you've had obviously an impressive career at the leaders, PayPal, Visa, and JP Morgan. What drew you to WorldPay after this successful career? And tell me a little bit more about what you do.
Yeah, sure. I always joke that there's some people who seek out payments. They go through school, I want to work in fintech, I want to work in payments. And then the rest of us stumbled into it, didn't even really know that it was a career or a field until they found themselves really deep in it. So I was very much in the latter camp. I was a strategy consultant out of school, did business school. And then I was at KKR, a large private equity firm, and we bought First Data. So I was dropped into First Data on behalf of the KKR ownership for 2 or 3 years to help drive profit improvement. And all of a sudden, I knew payments inside and out. So I just deeply understood the value chain, the economics, in that business, particularly SMB focused. But, someone had told me when you find an industry that you get dropped into that's up and to the right, this payments is 2% of the global economy and it's going to continue to grow as long as the global economy grows. That's the industry to stay in. So I stayed in payments after that experience. I'd been a total generalist up until that point. And so when I finished the KKR years, I went over to Visa. My claim to fame there was launching network tokenization. So it was on behalf of Apple Pay. So we designed network tokenization to be able to support a secure credential for Apple Pay on the phone. So that was a really fun couple of years. And then I wanted to go back to the merchant side from the network and went to JP Morgan, very large scale acquirer. At the time, we just had hit $1 trillion of payment volume. They're now, about two and a half as well. And I really grew as an executive and through my career in that role, eventually running product for JP Morgan Merchant Services, or what the industry calls payment tech, but nobody internally there calls payment tech anymore. And then I went over, mid COVID, just a itchy foot, wanted to do something different. I've been in the Bay Area for a really long time, wanted to work for a Bay Area-based company, and went over to run Braintree at PayPal. So Braintree and Hyperwallet on behalf of PayPal, which was a really, really fun job. Incredible commercial teams working really closely with lots of growing clients. But I'd always told recruiters, if you find me the junction of private equity and payments, that's when I want you to give me a call. So if you can find me a role and I can be part of the leadership team at a company at the beginning of a deal and be able to live through the deal life cycle, that's what would really excite me and get me to move. So this WorldPay one came about, and Charles is an incredible leader. He, was the founder really of Vantiv, and then Vantiv and Worldpay came together, and he came back out of retirement to do this job and put together an incredible leadership team. And so it's been a really fun ride.
Totally, I get it. I It reminds me of sort of a funny story. So when my now wife and I met, and she was working at like music, and so they like AOL Music back in the heyday, and they had all these celebrities coming in and doing like private concerts in the studio. Then she went over to work in Revlon when we were in New York, and she was like naming makeup colors and doing product development and working with celebrities on these big commercials. And I was excited about the early days at the time of Stripe, and I had met the Collinson brothers very, very early on, and I was like, "Oh my god, payments is like super cool and fun." And then I met Jack Dorsey in the early days when like Square was just a couple people, and I was like, "This stuff like payments and e-commerce, like online payments, is going to be the future." And she's like, "That stuff is so boring." Of course, now she's an executive at Square running AI, data analytics, marketing along the way, and she's like, "This stuff is really fascinating." So I always had the bug, but I'm glad to see more amazing people coming in and doing it.
My husband and I talk about it a lot because he's an aerospace engineer. And so he gets invited into the kids' classrooms, talk about space, like launching, some of space defense. And then the kids are like, "Oh, what does your mom do?" She's like, "She makes sure credit cards work." I was like, "It's a very fun job, I promise." It just doesn't sound that good in elementary school.
No, but it is super fascinating. And WorldPay is not a small player. 50 billion of transactions over 146 countries. So, from your seat now as chief product officer, tell me about how this payment reports kind of came along, and let's start diving into some of the key trends that you're seeing.
Yeah, absolutely. So, let me just hit WorldPay first. So, WorldPay is one of the three largest global acquirers. There's three of us that do about 2.5 trillion of payment volume. WorldPay is particularly known for our e-commerce offering, the global breadth of our footprint, and then also the way that we are able to manage multi-party. So we process a lot of PayFacs. The toasts of the world that have small businesses behind them still need a payment processor to do all that payment processing for them. So we do a lot of those multi-party model, a lot of e-commerce, some really fun industries, a ton of travel that we're powering. What we found, a decade ago, I think this was the 10-year anniversary of the Global Payments Report, is that payments is a very difficult field to get good information on. And so our clients have all of the same questions that those of us who work in the industry have on any given day. So, when you're thinking about launching into a new market, you want to understand like who are the local providers there? What are the dynamics that are happening? And it's very difficult to be able to find that kind of information even if you're willing to pay for it, but particularly if you're an individual merchant and you don't want to go buy a $10,000 Forrester report. So we started the Global Payments Report as an opportunity to kind of share with our clients all the information that they would need. So, if you think about some of the questions that they would sit there wanting to know, I'm thinking about a European merchant. I'm thinking about extending my launch into Germany. Like, is it true that less than 10% of transactions in Germany happen on a Visa MasterCard? Yes, it is. There's incredible variation at a local level of how people pay, what the share of e-commerce versus card present is, what the dynamics are within that market. So we really wanted to be able to share that kind of information with our merchants to help drive their business decisions.
And it is fascinating. Just by the way, we'll also link to it in the show notes for everybody else who wants to see it. It is fascinating and also just beautifully done as well. Just like it's a nice design. It makes it easy to read, like dense data, easy to read and fun to read. Go, keep going. Sorry.
Yeah, no, for sure. So, as it started to take off, our merchants, we give our merchants all access to it. And then we started to get similar questions from other parties in the market. So, there were people that were coming to us, "Hey, I know you guys have this information. Do you have a sense of, what the projected growth rate of, you know, UPI in India is?" So we had all of this information that was really cleanly brought together in a way to help drive better business decisions across the industry. And we saw it as an opportunity to really kind of take that thought leadership role and be able to share it with the rest of the industry. So that's kind of the origination of it, and we're really proud now of what we produce and how many people leverage it across the industry.
Cool. Well, we're gonna dive into a couple sort of specifics here, but like what before we do, what was the one thing that either surprised you the most or like the one like your favorite takeaway from the report?
Yeah, I think, the two that I'm probably watching the most carefully, I'd say the account to account payments is the area that I am most interested in the evolution. So what's an account to account payment? It's when a bank account is able to be facilitated into paying a merchant directly. So way back in the day, that was a check. More recently in the US, it would be an e-check transaction or a plaid type of funded. You go through your bank credentials and use that to pay. What we found is that the US consumer doesn't understand how relevant that account to account funded transaction is happening globally. So, a couple of the countries globally with a very strong central bank had central bank mandated initiatives where they really wanted to push the majority of payments into a digital transaction that was essentially nearly free to be able to do. So, the leading country that did this was India. So, India's central bank launched UPI, I think probably 8 years ago now. UPI is now 80% of transaction volume within India. It's essentially a free transaction and it's funded by a consumer's account, straight into a merchant's bank account. A couple of other countries, Pix would be the next biggest in Brazil. Pix launched maybe 4 years ago and it's already at about 60% market share. Blix as well is a third. And so being able to watch how some of those countries have been able to really displace traditional credit debit and fill a need on behalf of, both consumers and the needs to pay, but merchants and having a low cost transaction that they're able to rely on. I think using those as use cases to come back to the US and how do we want to influence and grow these developed markets like the US and Europe, where there's ways to do this, but none of them are at the scale that we're seeing of a UPI and a Pix.
And so it sounds like those were potentially government sponsored mandate, or were those private market innovations? Like what's holding back maybe the US from having faster adoption of this?
Yeah, they were definitely government sponsored, so they were central bank led, and there were mandates that came with them. So, if you want to have payments processing license in this market, where expect that you're able to process UPI, that you're able to process PIX. So certainly there's a move towards it, but it's also good for consumers and it's good for merchants, right? So what does it take to scale? A central bank can put out a framework and, some mandates, but if it doesn't work for the consumer, it doesn't work for the merchants, it's probably still not going to actually take off. And so, the ease of being able to digitalize all of those transactions from a consumer's point of view, solve the pain points that those consumers had with storing cash, being they typically don't in those markets have access to credit. It was really a way to be able to move their day-to-day transactions into a digital footprint. So, I am bullish though that developed markets can do it without a strong central bank if they can make it something that works for consumers and works for merchants.
Hey, we'll get back to the conversation in a moment after a word from our sponsors. All right. One of my favorite tools that I use and we use is Notion. Notion is used by thousands of startups around the world as their connected workspace for everything from engineering specs to new hire onboarding to fundraising. Notion has a special offer for listeners. 6 months of free Notion with unlimited AI, value of over $6,000. So you can access the limitless power of AI right inside of Notion to build and scale your company and team with one tool. Get 6 months free of Notion with unlimited AI, along with custom templates when you apply for notion.com/startups/puzzle. Once again, that's notion.com/startups/puzzle. Go for it. I think you all remember that sound. It's the dial-up. Why would startups still be using accounting software from the 1990s? It's like running your company on dial-up internet. It's like raising a Series A on a fax machine or pitching investors with a flip phone. You wouldn't build the next unicorn with outdated tech, so why are you still running your numbers on it? Puzzle is leading a new movement, an AI-first ledger that eliminates the grunt work, updates in real time, and actually helps you make informed decisions. No more waiting, no more guessing, just the clarity you need it when speed matters. This isn't just accounting, it's the future of how businesses run. Join the movement today at puzzle.io. And what do you think it takes to make that more popular in the US?
My hypothesis that I've been kind of developing for a bit is that the two big hurdles to scale of an open banking based solution or an account to account solution, the first hurdle is form factor. So the NFC is just an easier way to pay than QR code. All of us who have watched payments over the last decade have watched a lot of QR codes at point of sale just not take off, right? You need to be able to create a form factor that is as easy for the consumer as having their credit debit card that's on their, phone be able to double click and just be used to pay. What we've seen in the recent couple of years is that the FTC ruling on Apple is forcing them to open up the NFC chip to third party wallets. So you will be able to use the NFC chip for a non Apple Pay transaction. So all of a sudden now we're at the cusp of really being able to open up that friction that was created by a painful workaround form factor and be able to go back to the way that people actually want to pay from a physical perspective. Second, the American consumer loves points, right? So that's well understood. They migrate towards points. But a couple things are changing there. So we still see 50% of US transactions on a debit card. So they're living without points, for 50% of transactions. And all of a sudden, as surcharging is taking off, I don't know if you watch surcharging, the consumer all of a sudden is starting to realize me using my card has a cost of kind of 2 to 3%, which all of a sudden I'm being asked to bear. So are my Chase Sapphire points worth 3% to me? They're not. They're worth kind of 1%, right? So when I get that 1% free, I'm happy to take it. But when I'm asked to pay 3%, no way. There's not a chance that I'm going to pay 3% for that. And so as we see surcharging taking off, which the merchants are increasingly selecting into, the American consumer is starting to realize that credit isn't, necessarily king. And so then they're going to be looking for alternative ways to pay. So I think those are two real release points on the US consumers' willingness to change behavior.
One of the other big sort of headlines in the report was about e-commerce growing from 34% of e-commerce value to 66% of digital payments in there. Can you describe and talk a little bit more about what that means and what do you think is contributing towards this change?
Yeah, absolutely. I mean, I think what you've seen, and omnichannel was kind of the buzzword 5 years ago, but the old concept of card present versus card not present has really been broken, right? So, I could throw up 1,000 use cases, right? But if I go into a restaurant and I, order at the table using a QR code, I am creating a digital e-commerce based transaction with a stored card, but I sat in a restaurant, someone served me food. That's a pretty low risk transaction. The authentication could be made with a card, but it doesn't need to be because of the ease of use. So I think this growth that you're seeing is really that the in-person component might still be two-thirds of the way that we consume things and the way we spend money. But we've moved a substantial portion of those in-person payments into an e-commerce or digital based transaction. If you look at, transit, that would be another great one, right? So in a transit, in, New York City, you used to, tap a card. If you have a stored value card, all of a sudden, or Starbucks would be a similar. If you've preloaded, all of a sudden that became an e-commerce transaction, but you still walked in and you still, tapped something. There was still an in-person activity that was associated with that. And then even within transit, the move from cabs where people paid in person with originally a knuckle buster, and then they moved it to a Square device. And now it's, by and large, people are getting into an Uber. So we just moved that transaction to an account based e-commerce transaction, but people are moving the same amount. It's not like we stopped moving around or spending money on transit, but we've moved the majority of those transactions into a digital e-commerce based transaction.
Interesting. Yeah, I'm finding I live in San Francisco, so we're a lot of the guinea pigs of the rest of the world in some cases of modern technology, like the Waymo is now, I think, for the driverless car is now the majority of the traffic. So if I'm paying, I also see a lot in restaurants with Toast where you'll get a QR code on your sort of bill and then you're paying. Does that count as like an online payment or an offline payment?
It's a card not present, stored, token. So yeah, and so the merchant at that point is also using a card not present interchange. So yeah, it absolutely is.
A lot of the report is talking about the huge section is about sort of the differences between each of these countries, which makes sense, or the 140 countries or something like that, which is it's like fascinating to see some of the differences. What are some of the sort of more interesting things? So first of all, anybody listening, you should go just read this report. Even if you don't care about payments, you're in the world of commerce to some degree, as a user or not. It is fascinating. But Cindy, what are some of your favorite sort of call outs, either by country or payment type?
Yeah, sounds good. So I did my picks and UPI. I think that's probably my first. My second, I'll come back to surcharging. Surcharging is something that the networks worked really, really hard for a long time to prohibit because they don't want anybody surcharging. They don't want a consumer understanding that there's any cost to payments. Australia forced them to allow surcharging. So in the Australian market, I think it happened, I don't know, 7 or 8 years ago. All of a sudden, the government said, the merchants are allowed to surcharge. We can't push all this cost onto merchants. Like consumers have to be able to bear the cost of their payment choice. So merchants across Australia surcharge crazy amounts, like 3.5, 4% for cards. Really interestingly, when the government, this is all, the back channel, when the government forced the merchants to be allowed to surcharge on Visa and MasterCard, they didn't force it on Amex. So Amex is actually free, even though Amex is a more expensive cost of payment. Amex tends to be free in a merchant. So, and the other Visa MasterCards, they're overcharging well above surcharge because there's no caps, because it's just a really poorly structured law. But so, you can watch the Australian consumer. The Australian consumer, the wealthy ones have moved to Amex because they don't want to bear the cost of payments. The merchants are profiting off this. So the merchants are charging 4.5, 5%. They're using it as an extra profit line into them. And then it also drove inflation within the market. So all of a sudden everything just costs kind of 4 to 5% more. So it's so interesting to use these as case studies. And the US, as we've just started to allow surcharging over the last 18 months, and it's really taking off. San Francisco, I think we get a little clouded here by our own microcosm of what we see. If you go into the middle of the country, your average small business is actually surcharging at this point in time, and retailers are thinking pretty seriously about it. The large national retailers, but we're seeing like as much as 50% of net new merchants that join Worldpay. We board, tens of thousands of small businesses a month. As much as 50% of them are surcharging at this point in time. So it really is starting to take off. And so, we look to the Global Payments Report and we look to Australia as a case study of what we should expect to see over the course of the next couple of years.
It's almost like incentives drive different behaviors.
It's almost like incentives drive behaviors. It's almost like laws that are created with loopholes don't have negative consequences.
Man, you also like I'm just sitting there thinking, and like I'm the government relations person at Amex. You couldn't have like probably written a better bill for them, like on the thing as long as
Seriously, seriously. I hope he got a really big bonus that year. I don't know who it was, but would love to meet them.
on sort of continue on that. There's some places when I looked at the report where cash is still very dominant. Now I'm very aware that like we can't make generalizations across different countries, but it seemed like sort of Germany, Colombia, Ireland, Indonesia were still quite sort of cash heavier or index more cash heavy than some or cash favorable than some of the others. Any thoughts on sort of does is technology a thing that helps kind of crack digital payments in these countries more? Do you think it's cultural? Any shifts or any perspectives on that?
Yeah, I think they both come into play. Germany is such an interesting case study as well. That one I think is truly cultural. I think the German consumer, doesn't want to be exposed to credit that they don't need. They want to spend the money that they have in their bank account. And, even when they order something, they want to receive it before they pay for it, right? So they want to make sure that so they don't have the concept of, I order it, I could always charge it back. They tend to receive it and then they pay on receipt for the item or they ship it back. So there's absolutely some like very, very cultural elements at play. But in the developing economies, there's also, just some big structural hurdles. So how do people get paid? Right. So, I just actually got back from Dubai, and, Dubai is a fascinating market. I think, less than 5% of people who live in Dubai are Emirati. So the vast, vast majority of people there are, expats to somewhere else. And a piece of that are like professionals who are working and make a salary, but a very high percentage of it is actually working people who are sending money back home in remittances. So how are they getting paid? They are still frequently getting paid in cash. They have to take those remittances to an office. Somebody kind of takes a percentage of that and then ships it, does an FX transaction on top of it so that they can get it home. And so, there are still some big structural hurdles in developing economies in how people get paid and then how they move that money to their home so that people can, eat and kids can go to school.
One of your comments also reminded me from the report, and I think I put a note here on the Germany sort of like people like to spend within their means. Ugh, how backwards. So doesn't know credit and debt is like the way to boost the economy? I mean, this is what we're going through right now, listening to the debates between Elon and Trump on the budget proposal right here. But buy now, pay later, like what an insane growth. I think I've been looking here for 2014, 2.3 billion to 2024, 342 billion. Do you think this trend continues? How there's like so many different options now. It's almost like you're sort of like the complexity of options for checkout is getting crazy and exciting at the same time.
Yeah, that one's fascinating as well. I've struggled with buy now pay later. Like I was very bearish on it for a very long time. Like, why does this exist? Like the consumer that's on it has access to credit. I think it was like a cool thing for a while, the kind of generation below millennials was picking up on it. That consumer was told by their parents, don't get credit cards and get credit card debt. So they ended up on buy now pay later debt. I don't know that that was better, but I think that was like a marketing phenomenon, I would say, in the early years. I do think there's something to be said. There's clearly a consumer that is migrating to these ways to pay. I would say from a merchant perspective, the acceptance of some of the buy now pay later, what these wallets have been able to do is develop a two-sided network effectively, where they're able to really bring rich consumer data to bear for the merchants. So typically they actually cost more than a standard credit or debit transaction to a merchant. The merchant's willing to pay that. They're willing to pay that premium of 100 basis points, 150 basis points if what they get back from that network is, lead data, the ability to cross sell, the ability to understand that consumer's willingness to pay for pricing variation. And so that's kind of the nut that Visa MasterCard has never been able to do, because Visa MasterCard sees all the transactions, but they don't actually know who they're associated with. So they don't have an identity of, this 16-digit card number is Cindy and Cindy lives at this zip code and Cindy has this willingness to spend. They only see my, envelope of my transactions on that pan. And so what these buy now pay later wallets have been able to do, they use marketing and, kind of incentives to get the consumer side to scale. But then on the merchant side, they're really able to drive scale on the acceptance because they bring these value added services into play.
I think it ties into something where it's always fun to do. Or it's always fun to ask, probably less fun to answer. But talking about the future and thinking about like what is the future lean into. So one of the things that you bring up, rightly so, is that data is going to become a more important and more valuable thing, both probably in the age of AI and more digital commerce, helping merchants, especially small businesses, have more competitive advantage against some of the larger players that can afford big analytics and engineering teams and other things. So I'd like to talk a little bit about some of the other sort of what do we think the future looks like? Because it's always fun. One of the things said 2030, 79% of global e-commerce transactions are forecasted to be digital. That one makes sense to me. Like as the world becomes more digital, the more convenient, more competition, more sort of better interface things. That makes sense. To just be the convenience and or the rewards become more exciting. What are some of the other big shifts that you start to see you think are going to happen over the next 5 years?
Yeah, I mean, let's talk agentic commerce. I think that's the buzzword of the month.
Good. I wanted to ask that. I forgot to put that in the advanced questions, but
Yeah, no, for sure. I mean, I'm getting asked the question all the time. Look, I think that agentic is a very big umbrella. of ways to shop. And so if you define it by there's an agent who's empowered to complete a transaction on your behalf, that's already here from my perspective, right? So whether or not they then use, AI to try to anticipate what the cart looks like or shop on your behalf, without authentic, without a moment of agreement, all of that is to come. It certainly is going to start to scale in some way. But if we want to talk about like the use cases that are going to get picked off, the first and simplest is like giving something instructions to complete a purchase on your behalf. So that's already here, right? So you're already doing it. If you have an Amazon Echo, you can imagine, I don't think you can do it quite yet, but like you can imagine that you could tell your phone to order an Uber for you to my house to the airport. That's a very simple transaction. It's very low risk from my perspective. It doesn't take much for me to agree to it. From a payments perspective, though, I just created an agent and I need that agent to be able to go complete a transaction. So I still need a way to authenticate. I still need that agent to store a credential. I also need to go back and look at all my chargeback rules. So if that agent does something incorrectly, how does the chargeback? So there's a lot of work that the industry needs to do to make that happen. But that's a use case that you feel like, we're probably already there. It's probably already happening without the hard thinking about how does this impact chargeback rules? How does this impact like stored credentials? As you start to pick off more use cases, I can very quickly get to ones where there is a shopping bot that can shop on my behalf, right? So I'm not a big Instacart user, but you could imagine Instacart could very easily keep a pantry complete for you, right? So it understands what you have, it understands what you use. It could just create a basket, right, on a weekly basis, and it could send you an email like, "Here's a basket. Do you want it? Do you not want it?" That again is an agent, right? So that is agentic commerce. Some of the use cases Visa's throwing out there that I would ask an agent to go buy my mom a birthday gift. I don't see myself ever kind of participating in that, but maybe things will get a lot better. But, there's some real hard work that the industry needs to do in order to empower this autonomous agent being able to store credentials, act on behalf of a human, and complete payments. And particularly everything in payments, the complexity of it's in the back end. So how do we think about, liability shifts? How do we think about chargebacks? How do we think about returns when a third party has been empowered to do a transaction for you?
I mean, it's so exciting. Also, in the small micro world of payment alignment and the broader discussion of AI alignment is who is my agent working for, my wife or me? Because we have very different budgets for gifts and shopping along the way.
Very true, very true. It's funny, I as soon as the use cases were coming up from Agentic and all these people were kinda like, buzzing around, "There's no way I would let someone do it for me." And I have an incredible nanny who's worked for us for like 8 years, and she carries around one of my credit cards in my name, so I basically have a an agent that shops for me, makes completely autonomous decisions, and she does 100% of her shopping, right? I was like, "It's very true." So, we're all gonna get there at some point, it's just kinda how comfortable we're gonna get along that spectrum.
Yeah, I mean, I love the idea already of like just tell me, like, I need a car to the airport. Just tell me when it's gonna be here. Like, do I need to open the app, press a button? It's like you can just see the speed cases and some of the simple ones here. We have very much the same weekly shopping for us and the kids for lunches and snacks and whatever. Like, there's 10, 20% variability, but we can sort of almost guarantee there's just some things that are gonna be bought. We always need milk and eggs and cheese and chocolate for me because that's just the way it works.
Snacks for the children.
Alri yeah, exactly. So yeah, every once in a while, they should eat too. One of the other things that I think is gonna be hard not to think about, given yesterday's Circle IPO and a pop to a $32 billion market cap, in addition to Stripe acquiring Bridge for over $1 billion, how do we think stablecoins fit into the future of payments?
Yeah, I think the use cases that are most quickly coming to bear are on the back end side, so the settlement. What the stablecoin does, is a low FX, transaction that lets you move money between domiciles. There is an obvious use case there that is immediately relevant. So if you think about a merchant who's headquartered in one location who wants to accept in US dollar, if they don't have a US entity, they can't have a US bank account. So they can't receive settlement for those funds, but all of their costs are in US dollars, right? So rather than that entity, so wherever they're based, Mexico, Europe, wherever they're based, rather than them settling the transaction in their home currency, which is what the current ecosystem really requires for a US based transaction, they can now settle it into a stable coin that's tied to the US dollar. And then all of their costs of their running their marketplace, running their platform that they're doing are now also tied to US dollar. And if stablecoins can keep the cost, I mean, they're not free in any way, right? So all of the transaction costs associated with stablecoin are today, they're still kind of hovering around or above an FX. But if those transaction costs can come into, a real low cost way, it can very quickly be able to scale for settling for the settlement side as a way to pay until a consumer is holding a stable coin. I don't think it's really very relevant. There's some, fundamental things that we have to get over of like if you pay for something with currency versus if you pay for something with a security, it gets very complicated very quickly. You have to have tax recognition and all sorts of stuff on a security that you don't have to have with currency. But so I think the first use cases that we're going to see are the stablecoin. We actually had a stablecoin announcement this week as well, or last week with BK and NV out of the UK that we can also settle into a stablecoin. So that's something that I think is already here and will continue to scale.
Yeah, I think Jack Dorsey tweeted this morning that he bought French fries with Bitcoin this morning. And well, the first top comment on it was, what's your tax rate? Do you have, is it long-term capital gains? Is it short-term capital gains? How is that processed?
I mean, my response would be why? Did you not have $3? Like, that's a very high cost transaction for a low value item. Tesla did it, I think 5, 8 years ago that you could, certainly when you're buying a car that's $40,000 to not, recognize, gain on a Bitcoin asset and be able to use it to buy a car. All sorts of reasons at very high value, but I don't think anybody needs to be transacting in Bitcoin for quick service restaurants.
All right. Well, we're already way over time. I didn't touch even scratch the surface of this incredible report. Thanks for publishing. Thanks for sharing it. Let's end with a little bit of advice for people that are in the world of payments or thinking about it. For people who are founders or finance leaders, what do you think is an overlooked opportunity in payments that people aren't thinking about enough?
Yeah, I mean, I think every business has an opportunity to optimize their payments. So whether that's the pay in side, so are they thinking about the way to maximize their revenue, new ways to pay that can attract new consumers, generating higher authorization rates, optimization of their revenue if they're leaving people who wanted to pay that weren't able to transact, all the way through their fraud management, their cost management on those transactions. And then, the next wave as marketplaces and platforms are taking off is how do we then get that money to the ultimate seller? So, whether that seller is an individual, a creator, a small business that sits on the other side of that made a good and needs to receive money, what's the currency that they receive it in? What's the time frame that they receive it in? So the pay in and the payout, we're really still just all scratching the surface of what we can do to help optimize. And every business has levers that they haven't even begun.
Well, you answered all three of my questions in one polished, perfect answer, and understand why an executive like you is so excited at Worldpay. So excited to have you on board. How do people learn more about Worldpay and where do they find this report?
Yeah, absolutely. Just come to our website, worldpay.com. You can download the global payments report there. Also, feel free to find us on social media. We post a lot on LinkedIn and hopefully on Sasha's podcast as well.
Awesome. And we'll link to in the show notes, but worldpay.com. It's great. Cindy, thank you so much for coming in, sharing, and thanks for publishing the report. It is fascinating. And this was a fun conversation.
This was great. Thank you so much for having me.
Thanks for listening to Tech Finance with Puzzle and Turpentine. If you got value from this episode, please share it with anybody building or funding the future of technology. And please leave us a review wherever you're listening and tell me about what you want to hear more of. If you're looking for accounting software you'll actually love to power your company, check out puzzle.io, the modern accounting platform for the AI era. Tech Finance is part of Turpentine, the awesome podcast network behind Econ 102 with Noah Smith, Turpentine VC, Complex Systems with Patrick McKenzie, and so many more.